Hi, welcome to VCC TV. Today we have with us Mr. GS Sundarajan, whole-time director of Shriram Capital. Welcome to the show, sir.
Hi.
Starting off, how do you rate the performance of the government so far?
See, I think the first year and 3 months has definitely been very positive. Probably we can see the surge in the capital markets in terms of expectations, apart from the recent blip we have had because of the China issue. Government is making a lot of correct noises and efforts. They do need a lot of support in both the houses for getting some of their legislations in place. But I think they are on the right track.
Has the recent deadlock hurt the government's credibility?
This was expected, given what this government did to the earlier government, even though it was a different context. I think this is expected. But I don't think the opposition today has the stamina to continue this for too long. So I do think that the deadlock will get broken sooner than later.
So the RBI, SEBI and the government have all taken measures to improve the sector, the financial sector. How would you rate their efforts, and are you contented with what's being done till now?
See, one big difference I've seen today meaning in the last year and a half, is the extent of coordination which is there between the government and the regulators. I'm sure there's a lot of other negative noises we hear on specific issues, but I think overall from a policy alignment standpoint, there's a lot of alignment, a lot of positivity in the whole thing, and I do believe that if this continues, there will be a lot more action on the ground which will ensure that the resurgence of GDP back to where it belongs in terms of the 9% level will happen.
RBI announced payment banks license, and then there are 2 banks that are being announced this year. There are a plethora of changes that have happened. How is that going to change the sector now?
See, it's very constructive disruption, as we keep calling it, and I think this disruption is required in the financial services sector, because you have 70% market share with the public sector banks, who all of us know are not best in terms of productivity, efficiency, penetration on financial inclusion and all that. So given that, I think whatever is happening today is very good. I'm not a great supporter of payment banks because I still don't understand the revenue model. But the small finance banks, as well as the universal banks which are coming up, with the hope that there will be an open window for the universal bank licenses going forward to eligible candidates, is definitely a very positive thing. And I think these are really going to bring in extremely new technologies and go-to-market strategies of these new players, which will propel the existing players to also become a lot more agile, a lot more cost-effective, and therefore the customer is going to be the winner.
Housing is one of the areas that the government is concentrating towards. Is Shriram looking at that as a major sector?
Housing is a major sector both in our financial services as well as in our what we call the non-financial services. We have a properties company which is doing extremely well. Tata Capital has recently invested there as well. And we have a housing finance company which is a subsidiary of one of our listed entities. It's 3 years old. We have Valiant partners who are an equity partner there, a minority equity partner. But I think we have grown well there. We stick to affordable housing financing, and we should be at about 1,200 crores by the end of this year, and we should be able to double and triple that as we go along. But we are a great believer in housing finance, and we'll continue to support that.
Given the reach that Shriram has, right, will you be applying for any of the bank's licenses? And you just talked about payments bank. So RBI has said that there might be open tap licenses going further. Is that an option for Shriram?
See, we have always been keen on banking, on getting into a banking platform, because we believe that's going to be perhaps the last feather in our already colorful cap. I don't think we have any issues on that, but there is a big misalignment between the regulator and us in terms of the need to convert the existing businesses into the bank on day one. And that's something which we don't believe is possible, and therefore that disconnect has to be bridged through whatever dialogues we're having both with the Finance Ministry and the bank. As long as that is bridged, we will definitely be keen, and we will continue to keep our eyes and ears open in terms of ensuring that we look for acquisitions if that opportunity comes in. But at the outset, we need to resolve this particular conflict.
Talking about the PEVC arm, right? The sector has changed a lot in the last 1 year, right? How would you rate the sector at this point of time, and what can we see going forward in 2-3 years?
See, what has been maybe unsaid or maybe not really publicized as much is that the VCs also have gone through a huge learning curve in the last 7-8 years. There have been phenomenal successes of say Shriram Capital or even TPG, with the kind of returns they got from companies like Shriram. But there have also have been a lot of losses and a lot of very lower, very negative returns whenever the gold companies became, it was difficult to do the gold business because of the government regulations and all that. So given that, I think specifically in the finance sector, there has been a lot of learning which has happened. And today with the upsurge of the e-commerce companies and the financing related to that, with a lot of interest which is there. There again, hopefully the right kind of optimal decisions will be taken. But the opportunity is immense for PE investors, because today, unlike what we had in IIM when I passed out, today most of the guys want to start their own business. They have an idea and they want to start. And that really means that entrepreneurship is growing in the country, and therefore for VC and for private equity players, it's a great opportunity.
Now, on the same topic, exits from companies have been a bit difficult over the past few years, right? How do you see exits in the next year or so? And would companies find better valuations going forward?
See, I think it's very relative, right? It depends on what point the entries have happened. And if you really look at venture capitalists, the exits will never be a problem, because they can time their exits depending on what multiples they want and what stage of the evolution the company is. But if you really got into a larger than startup kind of an organization, then it really depends on whether you are convinced with the business model. And if you're convinced with the business model and you know you're going to get your multiple, you will exit at that point in time. But from a SEBI standpoint, from there's a lot of encouragement for IPOs today, and with the sentiments continuing to be positive, as most of the larger private equity players are talking about, I think IPOs will, with the kind of ease of norms which have happened in the IPOs also recently, I think it's going to definitely be a greater possibility in the coming years.
On this part, now the government has allowed foreign investors to invest in AIFs to make investments there. So is that going to drive up valuations of these startups?
I think it will happen in the medium term. I don't think it will happen immediately, because there will be a little bit of a learning curve again there in terms of how this whole thing is going to work. But in the medium term, it will drive value for startups.
Okay. Now, to the last question, technology has been one of the turning points for the banking and the financial sector. What innovation next can we see in the sector besides technology?
See, technology innovation is still not complete. If you really look at it, we have only seen the tip of the iceberg. As I always keep saying, 10 years back we never expected technology to play such a big role in what it's doing in the financial sector. But today we have seen some part of it, and we are now hoping that a large part of it also will be taken over. My only apprehension on technology in the financial services sector is that in India, it has to be a mix of traditional and digital banking. You can never do, and if you do only digital banking, you will exclude a large part of the sector going forward. And therefore, even 10 years from now, I do see the mix changing from, say, 30-70 in terms of digital and technology, digital and traditional, to about 70-30. But that 30% or 1/3 of traditional banking or community banking or neighborhood banking will continue to remain.
Okay. That's about it, sir. Thank you. Thanks a lot for your time.
Thank you.
Have a nice day.
Thank you.